Hello and welcome to Wake Up and Smell the Profit S&P and Qs review for Wednesday, July 5th, 2023. It's now the 3rd. We start off in the daily Qs, looking back to the October low. I'll zoom into the current area now. All of the risk levels from the previous video have been qualified and confirmed. So the next one to go after is this disqualified sequential sell risk here. Also the phantom and variable sequential. The sequential cluster sell countdown has printed the 5, and the combo cluster sell countdown 12 keeps marching on. And the propulsion momentum up for 50% and 100% was qualified and confirmed. Also, the 50% qualified and confirmed exhaustion up was tagged yesterday, so now it's back up to the 100% propulsion qualified and confirmed exhaustion up at 382.21, a little bit above that sequential disqualified sell risk level. So if it makes it through the disqualified sell risk level, it will probably tag the 100% qualified and confirmed exhaustion up, and there could be more potential upside. And before it gets to the disqualified sell risk level at around 379, it has to go through the Bollinger Band, upper band, and the upper Stark Band. The channel 3 high is being somewhat stubborn and is not bending like it should be. Well, if it gets above that and starts going after these two, then this will take a significant turn to the upside. So if price keeps pushing the envelope, these will get pushed up and possibly meet up with the disqualified sell risk level for sequential. And as we know, the buy signal for the Qs was given here on the 28th, and DeMarker 1 is still sailing away above its oversold line. Not by much though, it's kind of staying close to it. Concerning is the rock not getting back above its overbought line. It's kind of skirting along underneath it. And the DMI plus is still well above the DMI minus, so I don't see any obvious indication that these two are going to form a pincher. Like back here on the 24th, you can see the minus pointed up and the plus pointed down. Didn't amount to anything, but that's what a pincher would look like. So support to the downside is still the conversion line and the 20 simple moving average, but if it gets through those and somehow closes below the 50% and 100% momentum down at that level, a new momentum up level could be printed, and that would negate this 100% qualified and confirmed propulsion exhaustion up. So that's something to watch too. Underneath the momentum level down is the baseline and the 35 simple moving average, part of the rainbow pattern, which is looking mighty fine. Here's the 20, the 35, and the 50 simple moving averages, looking good. And before that momentum down level at around 358, there's the middle Stark Band at that level. Then the middle band of the Bollinger Band, the 20 simple moving average, and then underneath there is this ongoing demand line. And the demand line starts the day Wednesday off at 362.31. So a close below that level will qualify it. And if it keeps going, it looks like this is the area of interest for picking up more technology, as the qualified demand projection is there, along with the lower Stark Band and the channel 3 low. The Bollinger Band is well below these levels, but this looks like an area of interest here at that level. And the Q's daily chart is on the D wave up wave 3 and has blasted past its D wave up projection into mark, and they use highs and lows. I use closes. And the weekly chart is on the D wave up wave 1, so that's unlike the S&P 500 where both the daily and the weekly are on the D wave up wave 3, and the D wave up wave 3 projection for the daily chart in the S&P 500 was tagged, both mine based on closes and the marks based on highs and lows. So that leaves the weekly projection for the S&P 500 at 4478.49, so you can use that level, and if we get up there and tag that before a downdraft, that would be another area of interest to start shorting or really lighten up. And the intermediate term KST is definitely pointed down for the Qs in the daily chart, and the short term KST is pointed up but still has to get above its signal line, and everything long, intermediate, and short term are above zero, but this intermediate term is a little bit concerning there. And the Williams percent R made it back above the overbought line at -20. You can see the level there, -17.94. It can spend a lot of time up there, as we know, but it is really getting overstretched, and I do not expect it to spend this much time with a couple of little buying dips here, like at this time. Maybe for a little while, but they're going to the well once too often here. And the psychological line is at 50, so could be a buyer's market, could be a seller's market. It was a seller's market a couple of days ago, one day ago, so it's back up to the neutral 50. And if it goes past 50 and goes up to 60, that means we're onwards and upwards. And if it goes down back to 40, then it could be a downdraft. And I've been studying to mark Migaphone, that's with an I. Usually I look at Migaphone, which measures broadening patterns like a megaphone. This one measures consolidation, like, so it'd be a high here and low, and then a not so higher high and a not so lower low. So in other words, it narrows down. If you put the megaphone backwards and scream into the large end, something like that. And it did not even get the chance to print the 7 back here, so that's what we're looking for, just like in Migaphone, to print the 7, and printed the 6, and then that was it. It was off to the races. So that might have been a buy signal when it reached higher than this 5, so at 321.43, which, let's see where that happened. Actually, right here on the 28th, there was a high 322.64, higher than that high, so that would have been the signal. A little bit of a downdraft would have been scary, but then back off to the races. And interestingly enough, there have been many 6s, but no 7s. As you can see them all here. And again, I've just started studying this Migaphone, so I'll have to keep looking at it. And you can see, though, it's unforgiving, so it doesn't travel like the Migaphone. So if there was a lower low here in Migaphone, there would be a 7, but it looks like the 6 stops there when there's another low. So what it would have had to do is have the next bar's high would have needed to be less than this 5 here, but not lower than this 6, so that negated it right there, and that was it. Same thing here. It would have needed to have a high lower than the high of this 5 right here, and the next bar's high was higher than that, so that ended that Migaphone. Interesting indicator. I'm going to have to keep looking at that one. On a few instruments, I've seen a lot of 7s accumulated, and then that really indicated some upside, especially if they were, by end counts. I don't see them too much where the 6 or 7 is on the upside lately. So moving on, the MACD has yet to get back above its signal line. It's still below it, interestingly enough. And the QQE is trying to make another run to get the fast QQE back above the slow QQE. And the RSI, which is similar to QQE, is above the 65 line. I've lowered this bar from 70 to 65. And the ultimate oscillator is still pointed down. And the commodity channel index did make it back above its overbought line, but it looks like it's pointed down a little bit too.